Money soldier, I thought I told you. Only rockin' with the agent and the broker, yeah. Move over, we getting bolder. Making moves like the agent and the broker, yeah. Generational wealth, they bout that. Yeah, we took some L's, but we bounced back. Financial literacy, got that. Closing up the wealth gap, yeah, I'm black. Welcome to the Agent and Broker Podcast, hosted by Julian and James. And you know they bringing nothing but that black boss talk, man. Cause there's no currency stronger than the black dollar. And it's time we let the world know. But first we gotta grow though, and that's for sure.
Good evening, peace, family. How everybody doing? James, how you doing tonight?
Man, I'm blessed, highly favored. Hopefully everybody doing great tonight. How you doing, brother?
Awesome, bro. A little tired, but we here, man. We get into it. Another week, another episode of the Agent and Broker Podcast. I am your agent, Julian, license W626089.
And my name is James Dennis, your license number W282336 down here in Florida.
Absolutely, man. And guys, welcome to another episode. Last week, I hope you guys really enjoyed the episode with Brother Hassani. He talked about the infinite banking concept with life insurance and how you can become your own bank. And, you know, he dropped some major gems. I was very excited about that episode. We'll be dropping it this week on iTunes, Spotify, and Google Podcasts. So you guys can listen to it in your car, on the radio, wherever you're at, you know, working out. Tune into that episode. It's going to be dope. Coming up, some news coming up and things like that. James and I will be attending the Black Business Expo, April 1st through the 3rd. So we will be there as a vendor with the Agent and Broker Podcast, LBNU Financial and Connecting America, LLC. And we'll be representing, guys. Come down, say hi. You know, if you need help with anything from life insurance to real estate, financial planning, anything like that, we are here to help. So we want to open our arms to you guys and extend that help to anybody in our community or just anybody in general, anybody who's listening to this podcast.
Absolutely, man. And I mean, before you even continue, man, I can't stress enough, like that last episode we did on infinite banking. Absolutely. If you're listening to this right now, literally after you listen to this episode, go back to the previous episode and listen. And I like how we actually unpacked how a religious organization can use that infinite banking as a source of growth for their community. Right. Anyone and any entity can use that strategy to actually grow. So the last episode was actually a great episode. I mean, we have beautiful episodes, but last episode was pretty amazing because it was definitely outside of the box. I just wanted to say that, Julian.
Yeah, I agree 100%, man. And I'm excited for that one to drop. You guys be on the lookout for it. Run those views, those likes, those downloads. We appreciate it. We did officially hit 100 downloads.
100 downloads.
That's pretty big news, man. Just coming from an idea, really, and just getting out here this year, and already 100 downloads. Most of them coming off of Apple Podcasts, so awesome. That's major. A lot of people are tuning in every week, so we're averaging around like 9 to 10 podcast downloads a week. So hey, that's one a day, and we're gonna keep bringing you guys content throughout the week. Every week, every Monday, we're bringing you content. We're bringing you interviews, some other interviews we do have in the future here coming up. Next week, we may have another brother on who's gonna speak about another concept of the infinite banking. So I'm gonna reach out to him and see if he still wants to come and do that. But that'll be another good concept to where he actually teaches people how to, spend the same dollar twice, but also really how you can make 3% on all of your expenses. So when pretty much using life insurance to gain 7%, and then when you borrow from the policy, you pay your expenses and you can gain 3% back. So literally using like 4, but it's a really dope concept. I want you guys to really pay attention to if we bring him on. He's from the Bay Area, but he lives in Texas. And then after that, our last interview this month will be a special guest, Dr. Baptiste, orthodontist and the farmer guy. So he will be at the end of the month. So that's going to be another pretty dope interview that I'm really looking forward to, and picking his brain and seeing how he built a multi-million-dollar business and transitioned into farming. And, we could pick his financial side of things as well. You know 100%. What I'm saying? Yeah, that's going to be a dope one as well. But as for tonight, we will be covering what is called BOLI. You guys probably never heard of it, but it is bank-owned life insurance.
BOLI.
Yep, it's a major key component of life insurance, and we're gonna really break down, how important it is and why you should possibly be using this concept if the banks are using it. So
they're doing it with your money anyway.
Right. Showing them my eye. You got anything before we jump into this episode, James?
Well, the only thing I have to say, well, not the only thing, if not the most important thing, I just want to say personally, thank you for all the downloads. Somewhere out there are about 9 people a week, 100 people we have that download our podcast. So we want to say thank you, because that show us that you support what we're doing here for our community, and that show us you interested in educating yourself. And as Julian said, we start this not too long ago, and we already had 100 downloads. So it means a lot to us. So we hope to have 20,000 pretty soon, and then 1 million.
Absolutely.
And then we keep moving from there. So that's what I want to say. Thank you to everyone who downloaded. And if you haven't downloaded, make sure you download this, and make sure you follow us so you can keep up with the content.
Absolutely.
But yeah, that's all I have to say before we really get started.
Appreciate it, man. We're very grateful, guys. Like, we appreciate your support. We appreciate the people that tune in every week. The ones who download it, that means everything. Leave a rating and review also on all of the platforms. You can do that as well. Apple, you can leave a rating and review. Let us know if there's any topics you would like for us to cover. Let us know what we can do better. And, we need the feedback. For us to get better, we need that feedback. We like the feedback. There's even if it's criticism, that's fine. Constructive criticism, that's how we grow. So guys, don't feel like, oh, I can't really say anything because this is certain things. You can challenge us. You know what I'm saying? That's going to help us get better and grow. So we have no problem with, being challenged. So jumping in today's episode, not sure if you guys did hear what's going on in the news today. James did break some stuff down. I'm going to let him, tell about the video he dropped today about what's going on in the financial news. But also, guys, if you have your money in Wells Fargo, if you are a Black American, Black, Haitian, it doesn't matter what you are. If you are brown, African descent, Wells Fargo is not your friend, guys. There's a report that came out that Wells Fargo actually denied. They only approved 47% of mortgage refinancing applications for African American people. It's 47%. That's less than half. And I'm talking about people with 800 plus credit scores, people who work at Microsoft, who've been there for years, older people. They've denied them in probably arguably one of the greatest times to refinance your house, when money was extremely cheap. I'm talking about 0 to 1% interest rates. That's very cheap money. And they denied a lot of Black people over that time and over that period of people applying to refinance their mortgages. So guys, There's a challenge going on right now with Wells Fargo. A lot of people that look like us, a lot of people who are leading in the financial or in the entrepreneurship realm of things that look like us, they're taking their money out of Wells Fargo, and guess where they're putting it? Come on now, life insurance.
There you go.
But I'm gonna let James kind of tell you, what's going on in the financial services industry and what's affecting the money before we kick into the BOLI.
Yeah, absolutely, absolutely. So today, did a little research. So I sent out a message. There's three main thing that's being searched on Google right now when it comes to the financial industry, and I thought I'll share it with you guys. So for any of you guys who's thinking about getting into the industry, I highly recommend it. It's a great industry to be part of. Reach out to us, and then we can give you more information. Theagentandbroker.com, and we'll tell you exactly what you need to look out for. But according to Google, the very first thing, the number one thing that's being searched right now is taxes. Taxes. Taxes is part of the financial industry. The second thing is insurance, life insurance. A lot of infinite banking will be talking about. People are very, very interested about insurance product. Third, we're talking about mortgages. Mortgages is one of the top subjects that being searched on Google, recently. So to break it down to you, taxes, like I said in my video today, everybody in America has alliance with taxes. You have to pay taxes, or you participate in some way somehow if you're in the workforce. So it's something that's really lucrative, and definitely recommend you look into it. It's a really, really good avenue to be in the financial industry. Second is insurance. That's what we do. Julian and I, we sell life insurance, infinite banking concept, and we're here educating you guys about life insurance and why it's not just for death. Life insurance is for life, living benefits, where you can use death benefits while you're alive, where you can create your own bank, which is one of the things we're going to talk about. Even banks are using life insurance with your money. So why not doing it by yourself? So we're going to unwrap that as well today. Third is mortgages. A lot of people are searching mortgages, and I want you to pay attention to what's going on right now with the millennium market. Pay attention to the millennium market. A whole bunch of millennials are turning 30, and this is the time everybody want to buy a house. Everybody and their mama want to buy a house. Okay, so which mean right now this is one of the sector and the financial industry. If you're looking into, it's a great time to actually get into right now, because there's a lot of people buying real estate, first-time home buyers. So it's a good niche. If you want more information on that, you can also reach out to us. We have some great loan officers out there that will educate you on that spectrum. But anyway, this is what I wanted to share with you before we start talking about BOLI today. So I hope you write this stuff down and do your own research and reach out to us if you have any questions.
Yes, sir. Just to add on to that, gosh, James just gave you three things you can get into, really, in the financial sector, like taxes, insurance, and
mortgages.
That's just three. We're only talking three. We're talking about the number one industry that produces millionaires, financial services. You always use financial services. You use a Visa card every day, probably. MasterCards, that's financial services. All of those things are financial services. You pay. If you shop online, payment processing systems, that's financial services. So everywhere you look, everywhere you turn around, you are a part of the financial services industry. Now, if you guys aren't seeing what's going on in the world today, I need you to take the blindfold off. You know what I'm saying? Because you need a skill right now. We're getting to the point where things are getting really, really, really kind of scary, bro. Like, honestly, I read a report today in the Washington Post, where it said that about 16 million Americans will be losing their Medicare insurance.
Medicaid.
Medicaid once this pandemic and everything, all of the state health crisis goes away, people are going to start losing that insurance. Jobs aren't really hiring anymore. What you could do back in the day doesn't work in these new sector of
Nope.
jobs. So like you knowing somebody and all of this, no, you need a skill. If you don't have a skill, you're not gonna be able to provide or produce in this new world that's coming. So guys, that's technology, finances, anything on that sector, like it's recession proof. So be on the lookout. You know what I'm saying? Like, hey, start learning skill sets to grow your own food. We're gonna bring a farmer on here in a couple of weeks. We're gonna be talking about trades, like learn how to use your hands again, because when there's lack of resources, man. Also, hey, arm yourself. You know, start going to the gun range, do these different things, because when they start taking away a lot of this stuff from, things are gonna start getting really, really rough. Like, I don't think people understand. Like, I went in the store today and there was like food shortages with certain things. There's barely any like milk, any almond milk left. There's barely any oat milk. I'm like, dang. People are racking up, and waters, you know, things are shorted. It's a shortage going on. Like, China's starting to hold back Toyota cars and iPhones again, so they're not producing anything as of right now. These countries, there's a lot of stuff going on around the world. So if you're not paying attention and preparing yourself to the best of your ability, I feel bad for you. And
that's true, 100%.
like, I really feel bad for you. Like, get with some guys, get with some friends. Like, hey, I go to the gun range sometimes. Hit me up if you guys want to start going to the gun range. You know, you want to get out to the gun field. You know, I have a connection out there as well. Like, let's start getting training. Let's, you know, start, you know, taking care of your families, letting them know, like, hey, we need to buy groceries. We need to prepare as much as possible. So before we even get into the BOLI part, just wanted to give you guys some of those tips and bring you aware to what's going on in the world today.
100%. And I want to follow up a little bit on what you said about shortage. I mean, you can Google this stuff, go to TikTok and search it. The truckers right now, they having it really, really hard. So what's happening right now, you know, gas on average is 429, 439, at least in Florida.
Yeah.
You know, I don't know where you are. I have a car that used to take about $28 to fill up. Now it's about 60 to fill that baby up. Okay. So now what's happening with the truckers, imagine my car taking $60. Now imagine a big old 18-wheeler. You know, so they use diesel, the most expensive one out there. So I saw this trucker, he was talking about he spent $1,300 just to fill up one time. So, but what happened is the people are not willing to put the price up to pay them. Because if they coming from California to Florida, for example, if the load used to be like, let's just say $10,000, now gas is so expensive. Now the profit margin, now they have to pay for that.
Right.
So when you talk about shortage on food, you have to think of that, because some truckers are not willing to travel across the country and not making any profit.
Right. It don't make sense financially.
It don't make sense for them. So it's a whole it's a global you know, issue right now, but especially we're living in the United States. You know, it's really major for us right now with gas and transportation, with bringing goods to the stores, and, you know, trucks traveling from state to state. It's some major challenges for them. But anyway, we just wanted to share that with you before we start. We're gonna go ahead and you know, dissect into the BOLI concept.
Yes, sir. All right. So let me share my screen real quick. All right. Let's get a definition here. So BOLI, bank-owned life insurance. So what is bank-owned life insurance? Bank-owned life insurance is a product where the bank is the policy beneficiary and also usually the owner. Such insurance is used as a tax shelter for the financial institutions, which leverage its tax-free savings provisions as funding mechanisms for employee benefits. Guys, I'm going to read that again. Such insurance is used as a tax shelter for the financial institutions, which leverage its tax-free savings provisions as funding mechanisms for employee benefits. So, what did we talk about last week? Being your own bank.
Mhm.
So, I don't know if everybody knows how banks operate and banks work. When you put your money inside of a bank, let's say you put $10,000 inside of a bank, the bank will the bank will take your money and loan it to somebody else at a higher interest rate and
Yep.
turn around and give you 0.002% on your money. Meanwhile, they're going to loan it to somebody else at maybe 4 to 5%. But they're
Mhm.
also using that money to put into their life insurance policies on the back end.
Mhm.
And you see why in the definition, a tax shelter for these institutions, which leverages the tax-free savings provision as funding mechanisms for employee benefits. Guys, they're getting 4 to 5% or even more on their money tax-free.
Yep.
This is tax-free compound interest on the money. And wait until we break down and go into the numbers of which banks are doing these things. You guys gonna be like, what?
Mhm.
Like, yes.
It's gonna be mind blowing.
Yeah.
So I mean, you look at the word. The key word is tax shelter.
Mm-hmm.
Tax shelter. That's the key word.
Right.
Okay. Nobody likes paying taxes.
Mm-hmm.
Understand that nobody likes paying taxes. So if you had the choice to pay tax or not pay taxes, what are you gonna do? You're not gonna pay any taxes. So understand the concept of the wealthy is one of the concept of the wealthy is how do I pay less taxes or
Right.
no taxes? That's the whole game right there. Because remember, if you are making a lot of money, you also have to pay a lot of taxes.
Mm-hmm.
Okay, so this is one concept institution use, the wealthy use as a tax shelter. Now even the bank, BOLI, bank owned life insurance, that's exactly what they do. Like Julian said, to summarize it, is they take your money. By law, if you bring $10,000 into the bank, to your saving account, the bank is only um by law can take $1,000 and keep it there for you. So only 10% to stay in the account.
Mm-hmm.
And I think he actually went down, by the way. But anyway, 10%. So which mean the $10,000 you just put in the bank and you're saving, you just lend the bank money, and the bank can use $9,000 to borrow to other people and
Right.
collect high interest from it.
Yup.
So why don't you
Yup.
do that yourself?
Yup.
you know so it's a concept that using life insurance you can do. And like I said last time, and I'm never gonna stop saying it, you was wired to not believe in life insurance.
Right.
You was wired to believe as life insurance as a death
Death.
benefit. You were wired to believe that way. However, your bank, your Wells Fargo, your Chase, your whatever else,
BOA, Bank of America, all of
Bank of
those guys.
America, what they doing with your money? Oh, they say, oh, they don't know what to do with their money. We know what to do with their money for
Yeah.
them. So they literally take your money and like, okay, what you should have done with your money, you didn't want to do it. We're gonna do it with your $10,000 and pay you nothing back, and we make like 4 or 5%. Lend that money out, and
Yeah.
and make money for ourselves because you're
Mm-hmm.
irresponsible with your money.
Right.
So
They're
yeah,
not
man.
giving. They're not practicing the same financial advice that they're giving you. You know what I'm
Mm-mm.
saying? They're not telling you these things. But the FDIC, they require these banks to send in reports every quarter. After after the market crash in '08,
Mm-hmm.
all banks, state banks, local banks, everything, we'll go through that on the next slide. Um, they were required by the FDIC to report their statements of their tier one assets.
Tier one assets, meaning the best and the safest investment for the bank, where
Right,
they get most of the return from. And I mean, some of you might be listening, and we'll be going over those numbers. And we highly encourage you go to the YouTube channel, subscribe so you can see the screen because we're actually sharing the screen right now. But
right.
go ahead, Julian.
Yeah. And these banks are really, as you see on the report here, consolidated reports of condition and income. And this is from the FDIC.
Mm-hmm.
And every national bank, state member bank, insured state non-member bank, and savings association is required to file consolidated reports of condition and income as of the close of business on the last day of each calendar quarter. That's pretty much called the report date. So they have to report these statements to the FDIC every quarter on where their money, what they're doing with their money. And as we go to the next slide, James will read over these things. He'll read over the numbers to you guys, and we're gonna see where most of these what BOLI is and what these companies are doing with BOLI.
Mm-hmm.
And this next slide, it wasn't put together by us, but I did the research. All of these numbers are 100% accurate. You can go and research them on the FDIC website, but I like how they put everything on the and they rank every bank from 1 to 28 and who has the most money in life insurance. And I'm gonna let James kind of read through this so you guys can know, like, where are these banks putting their money at, and why are they putting their money here?
Mm-hmm. Why? Tax shelter, right?
Mm-hmm.
If I don't have to pay a tax on $20 million or $1 billion, I'll do that all day long.
Right.
Okay, so let's go ahead. We're gonna hit. What do you think? We should do top 15 or top 20? What do you think, Julian?
I mean, top 15 is fine. Top 10 is fine, honestly.
Top 10 is fine.
Yeah, that's cool.
Let's go ahead and do top 10. At number 10, this company spent $3.5 billion into BOLI, life insurance, State Street Bank and Trust Company. At number 9, almost $4.1 billion, the Bank of New York Mellon. Is it Mellon?
It's KeyBank, actually.
KeyBank, is that okay? KeyBank, I'm sorry.
KeyBank.
Number 8, $4.5 billion. At $4 billion is the Bank of New York Mellon.
Mm-hmm.
Citibank come at number 7 with over $5 billion into life insurance they purchased. U.S. Bank come at number 6, over $6 billion invested into life insurance. You guys won't believe who's number 1, and I'm gonna go down up the list. At number 5, we have Trust Bank, over $6 billion.
That's the new Sun. That's SunTrust.
SunTrust.
Truist. Yep, they changed the name to Truist. Yep.
Truist.
$6.4 billion in life insurance.
Jeez. And then we have PNC Bank at $8.7 billion. We're not talking about millions or thousands. We're talking about billions. Okay. Number 3, we have Chase Bank, JP Morgan, at $12 billion, over $12 billion invested into life insurance assets. At number 2, as you heard Julian talk about them earlier, Wells Fargo invests $19.4 billion. Guys, these are billions of dollars into life insurance product. And at number 1, you want to say who number 1 is, Julian? I'll let number 1 for you, man.
I think everybody knows what number 1 is. Probably the most popular bank out there at $24 billion stacked into life insurance. We're talking Bank of America. That's more than anything. That's way more than what they have in the stock market. They have about $3 billion in the stock market. They're doing $24 billion in life insurance reserves.
What does that tell you? Gee,
24. So now think about this. You guys are probably like, okay, 24 billion in life insurance. That 24 billion is gaining compound interest every single year. You're getting 4 to 5%, 6% on that $24 billion. That 24 billion in 20 years would be, we talking 60, 70, 80 billion dollars just compounding in this policy. And you guys are probably like, well, who are they putting the policies on? Shareholders.
Yep.
Board members, high executives in the company. they own the life insurance on these people, and they're putting their money over here because it's a tax shelter. You don't have to pay taxes on this money. It's protected, it's asset protected. So if anything happens to that bank during a time of uncertainty, like in 2008 when the markets crashed, the banks crashed, a lot of banks went underwater. Life insurance is not affected by that.
Nope.
So if anything, I don't know if you guys knew, however, but if anything happens to a bank while your money is sitting in that bank, they are legally able to hold your money up to 6 to 7, 8 months, freezing your money. You can't do anything about it. You can't access that money, and they have the legal right. You signed on the paperwork, like when you opened that bank account. You didn't know that, but if something does happen in that bank, your money is frozen. So it's not liquid. A lot of people like the bank, they'd be like, well, I know my money's liquid, or I can get it fast. They love the convenience of what a bank provides them. But all a bank is a business, is in the business of money management. That's all they do. They manage your money for you. They lend your money. They put it in cash flowing assets. They put it in life insurance. This is all they do. They're money managers. They're nothing spectacular. I know people think of banks as like, I don't know why people associate banks as if they're like government institutions. Like banks are businesses. They're for-profit businesses.
Yep.
And they take your money and they just manage it for you. You're pretty much allowing somebody else to manage your money and tell you and really give you nothing in return. And how I look at it, like, hey, bank with multiple banks. Find your local credit unions. Bank with those guys. One, because they are willing to lend you money when you need it. These big banks, they don't need you because they have millions and millions of other customers. But now, if you're talking about a local credit union, you know, your local federal credit union, like a Navy Fed or Alliant or, you know, First Tech Credit Union, any type of credit unions like that, these people are willing to invest into their members, these banks. So if a bank is willing to give you money, why not bank with them? But this shows you alone where banks are putting their money. They're tier one assets. You know, in case of anything goes wrong, this is the money that they have on hand. This is their number one, you know, source of income. Everything that's generating, they put in. Bank of America's putting $24 billion into life insurance, bro. Like that's major. That's man. I don't think you can get anything clearer than that. Like to show you that, okay, what am I doing wrong? You know, why are the banks telling me to put my money here? People talking about Roth IRAs, people talking about, you know, 401ks, people talking about all of these other financial vehicles. But why is the person who is over pretty much over all the financial stuff, people's money, why are they putting their money over here with the biggest institutions? And these are the questions you got to ask yourself. And hopefully we could spark, you know, that curiosity in your brain to be like, why are these banks doing these things?
And then even think of the concept, right? Just think of the concept. You make your paycheck, instead of you holding it for yourself and invest it for yourself, it's your money, you work for it, but you bring it to a bank. Now, some people may say, well, is the conveniency, you know, you have a debit card where, you know, you can swipe and you don't. Okay. Well, you know where they get you on that as well. Even though you're swiping the debit card, because the money is not tangible in your hand, you tend to spend more. So if you had, let's just say you make, you know, $5,000 for the month, and you see that $5,000, you're actually going to pay bills by yourself, or you actually going to buy what you need by yourself with the hard cash. Psychologically speaking, you'll be like, man, I don't want to spend that much money. But because it's on the card, you're gonna swipe all day long, you know. But let's get back about with the investment. So think about it. A bank will write you love letters all day long why you should open a saving account with them. Some even offer to incentivize you
Mm-hmm.
to open an account with them. Hey, you open an account with us, receive $200 and whatever. You know, and I think at one point, don't quote me on that. I think Wells Fargo did that, and they actually got in trouble for. But anyway, that's a whole nother story. But think about it: the whole concept, you bring the money to the bank, and the bank are the cleanest, the most beautiful buildings in your area, right? So they literally take your money and do exactly what you should do with it, and they
Yep.
do it for you,
For you.
but at their benefit.
Mm-hmm.
Can you imagine how many people in the US right now? 380 million people. Um, and how many people have an active bank account with any of these Chase, Wells Fargo, Bank of America, you name it? And you have all these accounts just sitting there, and that's free money for them. Free money.
They
It's
can
like
do
you
whatever they want
literally,
with it.
right?
Mm-hmm.
You literally work so hard for your money, and you say, "Hey, Mr. Bank, here." Like you never click. Like why? But really, when you can take your money and invest it to life insurance product as one of the vehicle that they spend they invest most of their money on, so you might as well do it yourself. How you do that? Educate yourself, call us, and then we'll drive you in the right direction. But anyway, man, do what the bank do for
Yep.
yourself. You don't
Be the
need the
bank.
bank to do that, man. Be the bank.
Be
Be
the
your
bank.
own bank.
Take the middleman out and be the bank. Like
they,
you can
they
do this
literally be in the
stuff.
middle.
Like you can you can do this stuff. If I can do it, you can do it. I didn't come in with financial background or anything.
Mm-hmm.
I've learned these things and learning money. Money is just habits. It's really just habits. That's all it is. Money, people look at money as if it's a spook thing or it's like people chasing money and chasing as long as you chase money, money will run from you for the rest of your life. I guarantee you.
Yep.
But if you become attractive enough, you will attract the money. You got to become attractive for the money to start coming to you and flowing to you abundantly.
Mm-hmm.
So educate yourself, guys. Like James said, financial literacy is key. And
100%.
see a license, and not just a licensed professional, but somebody who knows what they're, talking about, somebody who knows what they're doing. That is crucial whenever it comes to wanting to create this, type of product for you, like the banking concept. Like not every insurance agent can do that, but okay, we specialize in things like that. The guys we brought on specializes in things like that, but not
Mm-hmm.
everybody does. So these are concepts that the bank is doing where they're putting money in life insurance, getting the benefits of it. They didn't say anything about it being for a death benefit. They didn't even mention death when it came to life insurance. When it came to BOLI, death wasn't mentioned at all. It was tax shelter and taking advantage of that savings component in the life
Yep.
insurance policy. So guys, you can do the same thing. And moving on, kind of to get back into, like we talked about Wells Fargo. If you didn't hear us, if you weren't tuned in early in the podcast, we talked about the mortgages back in 2020. There's been major disparities by lenders when it came to black homeowners refinancing their homes. Money was dirt cheap, guys. We're talking 0.3, 0.2%. People were borrowing money that low. And Wells Fargo, out of all of the companies, was denying black people from refinancing their home in an economic boom when we never seen interest rates this low. And they denied their customers from refinancing. 47% black people were denied. Well, were approved. That's crazy.
It's
That is
crazy.
crazy. And if you're looking at all of the other lenders, we're looking at 71% were approved. I'm talking about people who are black who didn't get approval. We're not talking about just regular people. We're talking about Microsoft executives, people who worked at Microsoft for years. Black homeowners not being able to get approved by Wells Fargo with over 800 credit scores. So now what are we looking at? If the credit score is there, the history is there, you've been banking. What's the problem? The only thing you can really think of is, the black, and that's how they were able to gather this data. This is from Bloomberg, so we're not getting false information. These are studies that have been done.
Mm-hmm.
And these are this company alone puts what was that, 19 billion in the life insurance reserves.
Yep.
Wells Fargo's putting 19 billion dollars in life insurance, but they're not approving black homeowners for refinancing their refinancing applications. Guys, if you have your money in Wells Fargo, I'm not here to tell you to do anything, but this should bother you enough to kind of want to, move some things around. Start thinking of other ways or other people to do business with. Banks are nothing but businesses. You can go do business with other banks. They won't get mad if you cheat on them. They have enough. They have enough. They have enough
life
customers,
insurance.
Man. Yeah,
they have enough life
insurance.
insurance investments.
Like they got more in life insurance than they have customers. Like, go move your money. Like it's not hard. Just go to another bank, take your money out of these banks, and start banking with banks who want to do business with you. Banking is about relationships. It's relationship building. You got to look at your bank as, how can I build a relationship with this person? Because if you take care of your bank account and your relationship with them, they will take care of you. Whenever you need money to go and get money to start a business, to do whatever, refinance, to get a home mortgage, or to get an auto loan, your bank will take care of you if you are responsible. If you are always there in their face, if you're in your teller's face and they know you, build that relationship and cultivate that relationship. I'm not saying you have to, kiss any ass or anything like that, but get what you can get out of them as they're getting what they're gonna get out of you.
Mm-hmm.
So make that relationship of both sides, of both, make it both ways, go both ways,
two-way
man.
street. Mm-hmm.
Yeah, it is. That's what relationships are. So this is what Wells Fargo is doing. We're showing you. It's on you now if you want to make that decision to move or not. But you know what we doing? We don't bank with Wells Fargo, so it's not really advice for us or anything.
Yeah, but we just had to show you this number, and for everybody who's actually listening, who's not gonna be watching this, Julian, you mind if I kind of read the numbers for
Absolutely.
the listeners? Okay, so this is from Bloomberg analysis for the home mortgages back in 2020. So it reads this: Wells Fargo approved fewer than half of black homeowners refinancing application in 2020. So we're going to look at in percentage here. So 72% of whites who apply actually get approval from Wells Fargo. 67% of Asians actually get approved. Hispanic, 53% get approved with Wells Fargo. And when we're looking at the last one, which is blacks, 40% of people who send application get approved. Only 40%. So everyone else is beating the black folks out there. So other lenders, all other lenders together. So white, we have 87% got approved. Asians, we have about 85% of Asian gets approved. Hispanics, 79% get approved, and blacks 71% get approved from all of the banks. So as you can see, all the other banks actually, even though blacks are actually the lowest, but of course, if you know a little bit about the economic structure of the blacks, you will know why. Because you're looking at if you look at the ratio of the homeowners compare white to blacks, then I'm pretty sure that ratio is higher. But anyway, I mean, men lie, women lie, but numbers don't lie. So if these are accurate numbers from a very powerful source, which is Bloomberg analysis, then this is a legitimate source. So I just wanted to read that, Julian, to the people who's listening, who's not actually looking at our screen right now, but these are the numbers, that's showing.
It's the truth. And this isn't, we didn't do this for you to be emotional or, oh my gosh, they're racist and all of this. Hey, it is what it is, guys. You have to take responsibility now. Get your credit up. You know, if you need credit repair, you need credit, anything when it comes to building credit, give us a call. We do credit. If you
Mm-hmm.
need anything of lending, if you need extra lending and you need funds, you want to go buy a property, give us a call. Fill out our form. Like, we can help you. Anything when it comes to finances, we can help you. We can put you in the right, either in the right direction, or we can help you ourselves. We can help you
Exactly.
plan for a better future, and help you build your financial home, so you know that you're building with a strong structure and a solid foundation. Like that's the key.
That's the key.
And and we want you to take action. You know, don't get all mad about these things. Like, these are the numbers and statistics. They always throwing these type of racial disparities and things at us. But hey,
I think we'll lose Julian here for a second. Um, Julian, can you hear us? Okay, maybe not. He should be able to jump back in. But as he was saying, this is all and by the way, if you're online, you're watching live, give us a thumbs up if you can hear us. At least if you can hear me. Give us a thumbs up. But anyway, as he was talking, this is something we definitely have to consider, because on each community actually looked at different, you know. So when we was looking at these numbers before the show started, it's like, man, I can't believe it. Thank you, Sabrina. We have to work to do. Okay, good. Thank you, Sabrina. But Julian should be jumping back in very soon. Here he go. Here he goes. But welcome back, man. But what we was talking about is, when you look at the numbers don't lie. So you have to do your due diligence to know where you're bringing your money at, and especially if you really want to support your community, then you know exactly what you need to do. So our goal here is to bring you content, is to seek for the truth and bring you the truth. There is no sugarcoating things here. Okay, we're gonna, whatever information we find to bring you value, that's what we're gonna do.
right.
So welcome back, Julian. So I think we
Yeah, I
actually,
apologize.
hey, this
Lost
is what
some
happened when we
connection,
when we
man.
do when you have a show that's live, expect, things to happen. But anyway,
Yeah,
good to have you back.
appreciate it, guys. Yeah. So I think I was just talking about, getting your things together, credit, um, get life insurance. Start looking into things like wills and trusts, and ways to have your financial structure in order in your financial household. Um, the next thing we did want to cover, guys, was kind of going into, we talked about BOLI, and there's another thing called COLI, which is corporate owned life insurance, which is pretty much the same thing as BOLI. And businesses own life insurance on key people. So it's key person insurance. They have this insurance on key employees, directors, board members, people who are valuable to that business. They own life insurance policies on them, and they utilize it just like a bank does. But here are some the top 5 companies that are businesses that were saved by cash value life insurance reserves. And number one, coming in around the Great Depression time in 1929, is, you know a company where a lot of you guys have heard, a department store, which is J.C. Penney. So James Cash Penney used the cash value life in his life insurance policy to meet the payroll and day-to-day expenses of his department store. J.C. Penney is department store J.C. Penney. This allowed the company to ultimately rebound from the Great Depression. Today, the company has an annual revenue of $12 billion.
Hmm. And that
Everybody
tell you
knows J.C.
something?
Penney.
Everybody knows JC Penney, right? And JC Penney was saved Buy life insurance.
Cash value life insurance during the Great Depression. And y'all don't
During the
think that history repeats itself? What do you think is going to happen now with inflation going crazy?
Mm-hmm.
Y'all don't see a recession or a depression, something coming soon? Like lack of resources, lack of financial literacy. People don't know what to do, where to put their money. Here's the blueprint.
There you go. Life insurance cash value can save a whole company, and a lot of people use it. You want me to read the next one, Julian?
Yep, take it away.
1939, Foster Farm. Max and Verda Foster borrow $1,000 against the life insurance policy to invest into an 80-acre chicken farm. Today, Foster Farm produced are sold all over the world. Now, remember, this is back in 1939. $1,000 was a lot of money.
Yep.
Was a lot of money. And talking about inflation, 1939, $1,000 buy 80 acres of chicken farm. And 2022, yeah, you do the math. You can't even buy McDonald's for a whole year with $1,000. That's crazy, right? But anyway, go ahead and take the next one, Julian.
All right. So 1955, we have the famous Walt Disneyland, Walt Disney World, but Walt Disneyland was before it became Walt Disney World. Walt Disney was unable to secure a large enough bank loan, so he couldn't even get a big enough bank loan to keep Disney afloat. He borrowed against the cash value from his life insurance policy to help him finance the creation of his new theme park, Disneyland, out in California. Today, the Walt Disney Company has an annual revenue of nearly $70 billion, guys.
$70 billion. Jeez.
He built the park in California with life insurance reserves.
I'm telling you, man, you're listening to this right now. You're watching this. Hey, you can see it on your screen. This is some real stuff. So let me go ahead and read the next one. 1961, McDonald. When Waycross bought his partner, the McDonald brothers, he used cash value from his 2 life insurance policies to cover the salary of key employees. He also used the fund to pay for the marketing campaign for his new mascot, Ronald McDonald. The franchise has grown to over 37,000 stores and over 100 centuries. So
countries, yeah.
Countries. Every McDonald's is over 100 countries. Every corners you go pass by, you see a McDonald. As a matter of fact, yesterday, on my way to church, I have 2 kids in the back seat. My son is 8 years old. My daughter is 5. They see McDonald's sign. Every time they see a McDonald's sign, Daddy, I want McDonald's. Daddy, I want McDonald's. I cannot get a break. Like coming from church to home, I passed like 7 McDonald's, right? But anyway, and every single street corner, there is a McDonald's there. Can you imagine? Ray Kroc actually used life insurance to actually, to make McDonald's. Pretty much that was the path of McDonald's being McDonald's today, because he was able to use 2 life insurance policies to cover all these expenses with the, for the employees. So this is crazy. If you're not doing this, I promise you, you are missing out. Like you're literally missing out. And not to actually, just to elaborate a little bit, today I'm talking about I'm talking to a business owner, and we start talking about infinite banking, right? And it was her and her husband. You should see the eyes. They're like, "What do you mean? It's safe, and I have access to it. It's also a life insurance, and it's living benefits, and I'm getting compound interest. Is that legal?" Like you should see their eyes, And they're like, "So what would it be like to put 25,000 each year?" I said, "Okay, I'll work on a illustration for you to show you. I'm gonna tell you." So I have an appointment to go show them. But why is this important? It's not just businesses that can use it. If McDonald's use it, J.C. Penney use it. I mean, you can use it too. Your bank is using it, so you might as well use it yourself. Become your own bank, people. Stop getting scammed by big organizations out there because of your lack of knowledge. You can't say we didn't
Mm-hmm.
teach you here. But go ahead, Julian, for the next one.
Yeah, yeah. So 1980,
Hmm.
we have Pampered Chef. Doris Christopher used a policy loan of $3,000 to start her new kitchenware company, and the company was later purchased by Warren Buffett's Berkshire Hathaway for $1.5 billion. So
Billion dollars.
$3,000 to 1.5 bill using life insurance reserves, guys. I don't know how much more we can tell you that this stuff works.
Yeah.
It's a lifesaver. It helps businesses grow. It Some of the biggest corporations today like have been powered by life insurance, and that's just that tells you everything. So
For all of you guys out there who only think life insurance as a death vehicle, the banks, big institution, the wealthy, they want you to think like that so you don't invest into it. Okay.
mhm.
But now you know, if you know better, you should do better.
Yeah,
So we hope you do better.
absolutely.
Go to theagentandbroker.com and reach out to us, and then we'll give you more details that fit you on what it look like for you to open your own life insurance bank account.
Yes, sir. And then going on to the next one. All right. So another key component of life insurance, guys. I wanted to bring this up today. Um, I don't know if you ever heard of Jim Harbaugh. He's the University of Michigan's head coach. This coach was extremely smart. He got
Yep.
one of the highest paid. He's one of the highest paid in college football, but he also accepted a part of his salary in life insurance. uh, he pretty much. So this article says, up until recently, Jim Harbaugh was the highest paid college football coach. Now he's top three, but it's not just because of his generous salary. The genius part is how his life insurance creates income at a level many times what Michigan is paying for it. Guys, as I read this, listen to this. We know Michigan is paying Jim Harbaugh $2 million a year for 7 years. So that's $14 million. It's a $14 million loan to pay for his life insurance policy. People like, why does he need $14 million in life insurance? Again, BOLI, COLI.
Mm.
Remember, you got a savings tool in this life insurance policy. So if you're putting in $2 million a year, how much compound interest you think you're making?
Sheesh.
By year 10, year 20, year 30. It says we know that he will owe the IRS what they call an inputted loan interest by receiving that loan as a type of compensation, but that's more on the tax side. We're focusing on the life insurance. For employment incentives, life insurance is all very well and good, but for real incentives, we need something with living benefits. I'm not talking about long-term care riders, but cash value.
Mm-hmm.
Cash value is part of the many permanent life insurance contracts, and it builds over time as you pay your premiums. The type of life insurance determines how that cash value accumulates within the policy. So that can be whole life, that can be universal life, index universal life. Most people end up ignoring their cash value, and most people also buy whole life insurance, which builds cash value about as fast as a Porsche 911 with racing tires in a blizzard. You can use this cash value to pay premiums on your policy or to take out loans. It's essentially the insurance company saying, you may borrow this amount from us and we won't ask you any questions. Insurance agents have had a good time questioning or guesstimating what the death benefit on Harbaugh's life insurance policy would be. They range from as low as $35 million to $75 million in death benefit. But they do know that Michigan is going to get $14 million back of that death benefit because they loaned him the $14 million.
Mm-hmm.
But if they're loaning you $14 million, and that 14 million grew to 100 million. Is that not a good deal?
That's a great deal. That's
You
a
know what I'm
great deal.
saying?
you mean I mean, summarize this real quick. You mean the NFL use a life insurance policy as a collateral to pay a salary for a coach?
This is college football. And they
I
probably
mean,
doing it in the NFL.
not even NFL. I mean, college. So NFL probably doing it. It's just not being reported. But college, that's what they use. They use a life insurance policy as a collateral to pay someone's salary. This is nuts. And here you are, when somebody talk about life insurance, you're like, oh man, I don't want to die. I mean, I hate to say it, but educate yourself. I don't want to say you're stupid because we've been brainwashed to think this way. But if you're listening to this, man, whether it's today, tomorrow, 20 years from now, 30 years from now, educate yourself, because this been around for a while. Right. And people who are aware of it are using it to the maximum capacity, as you are holding the shortest end of the stick. Mm-hmm. As you helping them invest 90% of your money without getting back. Then this is going back to the example I gave earlier, where by default, the bank, they can only keep 10% of your money. So if you put $10,000 in a bank, by law, they can keep 1,000 in your account and invest and let other people borrow the other 9,000. So you literally let people use your money when you could have been doing the same thing they're doing by skipping the middleman, where you get with an insurance company. You said, hey, I'm going to put $10,000 here every year. What does my return look like? And through an illustration, which we can show you, where you can see exactly what your return would look like, cash value, and what your living benefits and the long term and the medical side would look like as well. And hopefully you do qualify for it. And yes, we said qualify, because even though you're getting that compound interest, baby, it's real. But you got to be healthy. You got to have a clean background for this company to even accept your application. You got to have a clean driving record, a clean medical record. You have to be in good health, because literally once they approve you for that contract, say it's $10,000 for the year, you put that first 10,000, that 10,000 can equal to maybe $3 or $5 million in death benefits, depending on how old you are. They are responsible to pay you out those millions if you die, let's just say within the first year, within the 6 months. And some company, you die the next day, they owe you a couple $1,000,000. So that's why they have to do their homework to make sure you're healthy. So the healthier you are, the cheaper it becomes, and the better it is for you. Okay? Yeah. So that's what the banks are using. So why not use it for yourself? Because they literally just being the middleman. It's crazy, man.
From banks to politicians to anybody you can think of, like, that is a high figure in this society, is using life insurance cash reserves to avoid paying taxes, man. It's not illegal. We showed you guys 2 weeks ago, the IRS and the Internal Revenue, they put this in the code for you to use. And if you guys study and start learning the tax code, you will understand that the government truly doesn't want you to pay taxes. There's most of the tax code in the Internal Revenue Code is built for you to not, ways for you to save on taxes. But the common and average person doesn't know that. So the common person spends way more than they should on taxes. And they have Robert Kiyosaki, and back when we was in PHP, they taught us about the quadrant. You have the business owner quadrant, where you're either an employee, a business owner, investor, and then there was what was the other one? I forgot. There's another one. There's a 4 quadrant, and the right side of that quadrant was investors and business owners, people who were entrepreneurs and investors. They have the best. Entrepreneurs and investors have the best tax incentives out here. They have most of the tax laws that are in place favor those people. Why? People are like, why don't they tax the rich? You can never really tax the rich. One, the rich read, they understand the tax laws. they have a plethora of financial, advisors, tax attorneys, people who study these laws on their team, so they find ways to avoid it. The government doesn't tell you this. A politician to get on TV and tell you we're going to tax the rich. In in reality, the government credits these people tax benefits for supplying housing for people because the government can't do it. So if you own real estate, you get tax write-offs because you're supplying housing for people. If you're a business owner, you have employees, you're supplying jobs for people. So the government is going to credit you and give you a tax benefit for doing that because it takes less responsibility off of them. It's more responsibility on you and not on them. So guys, stop paying attention. Stop listening and believing politicians. They've been lying for years, hundreds of years now. And we're gonna keep doing our best to educate you on these, on life insurance, but also on other ways to save from taxes, man. Like, we don't want the government taking our money. Like, they've taken enough from us already as a people. Let's educate ourselves. Let's continue to educate ourselves and keep building.
Yep, we definitely got to do that, man. And I know if you're watching, you realize I kind of turn around to grab one of my books. And I grabbed the book for one reason. One thing you just mentioned about taxing the rich. Let me tell you, man, politicians understand the game. You know what they do? They find a way to say things that you like, and then you go out there and you vote for them. That's what they are. They're politicians, okay? So to back up on what you said, when it comes to taxing the rich, now most people probably don't know this guy, but I'm gonna show you the book. It's by actually Ben Carson. Dr. Ben Carson, America the Beautiful. Now, I'm not getting paid for this. This is not an advertising for the guy, but it actually went to explain to you back in ancient Rome what happened when you decide to tax the wealthy. Just a little light to this. Rome at one point had the best economy in the world. Ancient Rome. What happened is they start using the concept taxing the rich among some of the components as well, because there was a lot of high moral standard that the country loses. It's a whole story, but anyway, what happened when you tax the rich, it never actually worked, because like Julian said, the rich, they actually read and they understand that there is a tax code. Understand that if you're working out there, you're making, let's just say, $80,000 income and a W-2, and there's a business out there who's bringing $5 million for the year in total revenue, you may end up paying more taxes than the business. Why? Yep. Because that's how the tax structure works. Yep. You are a W-2 and the business is a LLC. Yep. Or a corporation, they tax different. Yeah, so it's funny to me, man, when you get those people on TV saying, oh man, they make $5 billion, $10 billion for the year, but the regular working American is paying way more taxes than them. Don't listen to this BS. It's all BS. Understand the tax code, because that's where the wealthy take advantage. They take advantage of the tax code. Right. Okay, if you understand how taxes work, then you can find a way to avoid paying a lot of it or zero taxes. But I think we have a comment here, Julian. You want to go ahead and read it?
From who is this? Jackson Antoine. Great plan. I live, I use it, and I die. My family use it. It's simple, and I have one. And I believe he's speaking on the life insurance policy, guys. So
there you go.
You got people here who are insured, and that's a great thing. So call James. He said call James to see how he can customize one for you.
My man Jackson, brother Jackson, right. Good to hear from you, man. Thank you so much. And it is the truth that we can customize one for you, because it's not a one shoe fits all. Like buying term and invest the rest. I don't want to, scratch my throat here for any company who's buying term and invest the rest. Good luck with that. But it's not a one side fits all. So you have to actually make it fit you personally. But it's good to hear from you, Brother Jackson, that you are using this and you understand the simplicity and the value behind a powerful tools like that, man.
Absolutely, man. That um, thank you for the shout out too, and for tuning in today.
Yes, sir.
It's good to that other people get to see, you know, and see other people that are utilizing these tools and vouching for them. So, guys, we don't want to hold you too much longer. A little bit, 10 minutes, a bit
Yeah, right. We
beyond the
went about
hour.
10 minutes
So
over an hour.
it's still fine though. We were bringing some major gems, some good valuable content.
100%.
So next week, if we don't have a guest, we'll be back. Of course, you know we're always prepared, whether we don't or we do. But stay tuned and like, subscribe, share this podcast with your friends, your family, anybody. Help save a life. Let them know, hey, you guys need life insurance. You know, don't be scared to reach out. Don't be scared to ask questions. We're open. You know, we're open books. We won't hide. We won't sugarcoat anything from you. And if you are interested, the you can see the link is down there, www.theagentandbroker.com. You can submit a form in our lead list online. It's right on the first page. You can submit all your information, and James or I will get back in touch with you and see how we can see when we can schedule some time, and then see what we can do for you guys, whether that's building your credit, whether that's if you need to do some type of repairs in your home, or you need to purchase a new property, or you want to get into investing in real estate, you want to become a life insurance agent, you want to just do something that can get you, change the direction of your life, and kind of going towards building generational wealth. But I always say, you can buy wealth while you build wealth by purchasing life insurance. So there's
100%.
no excuse, of not being, hey, if something happens to you, you leave your family hundreds of thousands or at least millions of dollars. So they automatically walk into wealth. So you got anything else you want to add on to that, James?
So to just add on to what you said, as you're building wealth, you actually get life insurance to transfer wealth as well. You know, so I mean, thank you for everybody who tuned in today. We have 100 downloads last month, so I'm hoping we double that. This month. So if you
Mm-hmm.
haven't downloaded yet, make sure you download the podcast. We're on Spotify. Um, we're on
Apple,
Google,
Google,
Apple.
all that.
So we're on all of the platforms. So make sure you download and leave a comment there. It actually helped the algorithm to actually, it also shows support as well. So it
Mm-hmm.
actually help us when you like, download, and share. Any little bit actually help us. So we encourage you to go ahead and do that so we can keep on doing the work we're doing here. 100 people download this podcast. So which means we are doing something right. We're gonna come at you raw. We're gonna come at you very vulnerable, and we're gonna
Mm-hmm.
come at you with the truth. There's so
Absolutely.
many gimmicks out there when it comes to life insurance, where the trust between the life insurance company and the people has been, broken. So one of our mission is to build the trust between the life insurance, with life insurance, our people, so we can make an educated decision, so we can get rid of that mindset and
Mm-hmm.
take advantage of what's there for us. If you're scared of
Absolutely.
it, there's a reason for that. Find out why you're scared of it, and then you'll be amazed. And then you start investing in yourself the right way, where you have liquidity, you can finance your retirement. At retirement, you can have tax-free income. And if you don't make it to retirement, you can actually, if you get sick, you can use millions and millions of dollars, depend of, the policy you have. But anyway, it's always a pleasure being here every Monday to bring fire to you guys. And we enjoy doing this, man. So make sure you support by following us on all our social media platforms.
Absolutely. Y'all have a good night, guys. We appreciate it. And thank you again. Wait, we have one more comment here fire content guys.
Fire content. Kristen, what's going on, Kristen? Good to see you here, man. You know, good to see you putting a comment here. Fire content, and thank you so much for commenting. And we look forward to continue to bring those fire contents and get better. And like Julian said earlier, man, we want a challenge. And if you want to challenge us,
feedback, guys.
You know, we want some feedbacks. You know, what do you want to hear next? You know, reach out to us. Hey, can you guys talk about, you know, XYZ? Can you talk about trust? Can you talk about the living will? Can you talk about, like, whatever it is you want to hear? We're going to bring it for you. So we would love to stay in communication with you, you know, by receiving those requests, so we can know exactly what you want us to cover next time or moving forward.
Yep. All right. Stay dangerous, guys. Have a good night.
Have a good night.
Later.
The agent and the broker put you on the right path. And if it ain't adding up, then do the right math. And when you wanna come up, some might laugh. But them be the types to be the overnight staff. Always be a worker, we tryna be some owners. Sometimes might strike out, sometimes we hitting homers. But one thing's for sure, when the money gets uncovered, hit the agent and the broker. Say thank you to my brothers.